Welcome to Lendgo's Mortgage Mastery Podcast, the ultimate guide to mastering your home financing journey. In each episode, we bring you expert insights, practical tips, and real stories to empower you on your path to financial freedom. Welcome to the latest episode of the Lendgo's Mortgage Mastery Podcast. Today, we're diving into a topic many homeowners encounter but do not fully understand: property liens. Whether you're a seasoned homeowner or just starting your journey in real estate, understanding property liens is essential for navigating the complexities of home ownership. Dealing with loans and mortgages often involve navigating legal complexities and technical terminology. If you've had mortgage experience, you've likely encountered a lien. This term is frequently associated with real estate, and homeowners are often curious about putting a lien on their houses. This episode is going to explore essential insights into property liens, their types, and how they impact home ownership. We're going to delve into the process, types, and implications associated with the possibility of putting a lien on your property. Whether you're contemplating securing a debt or simply curious about the details, this episode will answer the question, can I put a lien on my property? So please sit back, relax, and get ready to expand your knowledge on property liens as we unravel the intricacies of this crucial aspect of home ownership. Let's dive in. A lien represents a claim on property, enabling the holder to access the property if outstanding debts are not settled. This legal mechanism is subject to formal filing and approval, technically overseen by a county records office or a state agency. Once approved, the lien is formally delivered to the property holder, outlining specific terms that notify them of the action taken to repossess a portion of the property. Liens can be broadly categorized into two types: those attached to real property, such as a lien on a house, or those tied to personal property, like cars or furniture. For instances, mortgages or property tax liens are examples of real property liens securing the debt against the property itself. Homeowners must understand the intricacies of property liens as they directly impact their financial and legal standings. In this episode, we're going to explore the different types of liens, how they are established, and their implications for home ownership. Stay tuned to discover crucial insights into navigating the complexities of property liens and ensuring a secure future for your home. Understanding how liens work is crucial for homeowners as it directly impacts their property ownership and financial stability. When a lien is filed against your real property, it grants the lien holder the authority to foreclose on your house if the associated debts are unresolved. Essentially, the lien holder has the legal power to take possession of and sell your home to recover the owed amount. Lenders often conduct title searches during their mortgage approval process to mitigate risk associated with liens. This thorough examination identifies any existing liens linked to the property's title. Consequently, lenders are typically cautious about approving mortgages for properties burdened with outstanding liens. For homeowners planning to sell a house with an existing lien, settling the debt tied to the lien is a crucial prerequisite for completing the sale. This process ensures that the property is free from encumbrances, facilitating a smoother and legal transfer of ownership. Liens on houses can significantly impact various aspects of real estate transactions and ownership. They can affect the ability to secure a mortgage and the feasibility of selling the property without addressing the associated debts. Creditors use liens on houses or other properties in various situations. To establish a property lien, a creditor must file and receive approval through a county records office or state agency. Each jurisdiction has its own rules and regulations governing property liens, which are granted to repossess property if debts are not settled. A common example of a lien on a house arises when you take out a mortgage to purchase your home. Despite holding the title and being the legal owner of the property, your mortgage lender places a lien on the house because you owe them the money they provided for the purchase. The lien remains inactive as long as you keep up with your monthly mortgage payments. It's only removed once you've fully repaid the lender, either by the end of your mortgage term or through the home sale. However, the lender may initiate foreclosure procedures if you face financial difficulties and stop making mortgage payments. In such a scenario, the lender has the legal authority to seize the property and sell it to recoup their losses, all thanks to the lien they placed on the house. In cases where multiple liens are on the property, each loan holder has a specific position in line to receive procedures from the sale. This occurs after the primary mortgage lender or any senior lien holders are paid. Essentially, a lien is a safeguard for the lender, allowing them to act if the borrower defaults on their mortgage obligations. Understanding the various types of liens is essential for homeowners and property stakeholders, as they can significantly impact property ownership and financial obligations. Voluntary liens, such as mortgages, are willingly entered into by homeowners when they agree to use their property as collateral for a loan. In the event of default, the lender has the right to take action to recover their investment by selling the property. On the other hand, involuntary liens arise without the homeowner's consent and typically result from unpaid debts or legal judgments. Mechanic liens come into play when contractors or subcontractors are not paid for work on the property. These liens give them the right to seek payment by placing a claim on the property. Judgment liens are issued by courts when individuals fail to fulfill their financial obligation and a judgment is made against them. These liens serve as a way for creditors to secure the owed amount by placing a claim on the debtor's property. Income and property tax liens are imposed by local, state, or federal government entities when individuals fail to pay income or property taxes. These liens serve as a means for government to secure the owed tax by placing a claim on the taxpayer's property. Understanding these various types of liens is crucial for homeowners to navigate potential financial liabilities and legal obligations associated with property ownership. A lien on your house signifies a legal claim or hold on your property, usually due to an outstanding debt or obligation. This lien could be related to various factors, such as mortgage, unpaid taxes, or even fees owed to a contractor for work on your property. While having a lien doesn't mean immediate loss of ownership, it significantly impacts your ability to sell the property without addressing the associated debt. Property transactions can become complicated, and resolving the debt tied to the lien becomes crucial for a smooth transfer of ownership. There is a risk of foreclosure if the debt linked to the lien remains unresolved. This means the entity holding the lien, often a lender, could legally take possession and sell your house to recover the owed amount. Understanding the priority of liens is also essential. Certain liens can take precedences over others in the event of a property sale. Mortgage lenders, for instance, technically have a higher priority than other lien holders, which can affect the distribution of proceeds from the sale. Here are some frequently asked questions about property liens. Can I put a lien on my property? In most cases, individuals do not voluntarily place liens on their property. Liens are typically imposed by creditors, such as lenders or contractors, to secure debts owed to them. However, there are scenarios when someone might consider putting a lien on their property, such as during financial restructuring or using the property as a collateral for a personal loan. Understanding the legal implications of such actions and seeking professional advice before proceeding is crucial. How can I remove a lien on a house? Removing a lien involves settling the debt or obligation associated with it. This usually entails paying off the creditor or fulfilling the terms outlined in the lien agreement. Once the debt is satisfied, the lien holder must issue a release or satisfaction document, which is then filed with the relevant county records office or state agency. It's advisable to work closely with legal professionals during this process to ensure proper documentation and compliance with regulations. What happens if there's a lien on my property when I sell it? Having a lien on your property can complicate the selling process. Prospective buyers may encounter difficulties securing finances, and the sale may not proceed until the lien is addressed. Generally, settling the debt associated with the lien is a prerequisite for a smooth and legal compliant transfer of ownership. Addressing any liens on the property before attempting to sell it is essential to avoid delays or legal complications during the transaction. Property liens can have significant implications for homeowners, affecting their ability to sell or refinance their properties. Understanding how liens work and their potential impact is essential for navigating real estate transactions successfully. If you have any more questions or concerns about property liens, consulting with legal or real estate experts can provide valuable guidance tailored to your situation. Navigating real estate transactions requires a comprehensive understanding of existing liens and their potential implications. If you encounter a lien on your property, addressing it promptly is crucial to safeguarding your investments. With Lendgo, your local mortgage search platform, finding your dream home is made easy. Even if a house has a lien, Lendgo is here to assist you every step of the way. Your ideal home is within reach, and we're dedicated to helping you make it a reality. We hope today's journey into the world of home financing has left you inspired and equipped to make informed decisions on your path to financial freedom. Remember, your journey doesn't end here. To stay connected with the latest tips, trends, and success stories, be sure to hit that subscribe button. Don't miss out on upcoming episodes filled with expert insights and practical advice tailored just for you. For even more resources and exclusive content, visit our website at lendgo.com. Until next time, take control of your financial freedom. And remember, your journey to financial freedom is just beginning. Subscribe, visit our website, and join us again next week. Happy financing!